So it's my pleasure today to introduce our speaker, Rob Galbraith, who is a director in the Property and Casualty P&C property underwriting area at USAA Insurance, where his team is responsible for developing and managing USAA's catastrophic underwriting guidelines for all property lines and perils, including wildfire. Rob has over 20 years of experience in the financial services industry in a variety of positions with USAA, Smith Barney, and the Federal Reserve Board. Rob has earned several industrial professional designations and is actively involved as part of multiple industry trade groups. And I'm sure we'll get to know more about Rob today. So as we move forward, I will hand the floor over to Rob.
Thanks so much, Stacy. Is the voice coming through okay?
Sounds excellent.
Perfect. Special thanks to Stacy and to Chris Dykes from the California Fire Science Consortium for the opportunity to give this presentation today via webinar format. I've had the privilege of being at several states over the past year giving a very similar presentation. But the webinar format is obviously a great format because everybody can across the country and even Canada can dial in, and obviously a recording will be made and folks can watch the replay. So as Stacy mentioned, I know this is a topic of profound interest to many different stakeholders. So my plan is to cover about 40 to 45 minutes worth of material and definitely save 15 to 20 minutes at the end for any questions that you have. As Stacy mentioned, my background is really focused on the catastrophic perils at USAA. So if you think about the types of losses that insurance companies have, I would argue that they fall into two categories. One is your traditional types of losses that really go by the law of large numbers. Plumbing leaks, bikes getting stolen off the porch, things like that, that we don't know which of us are going to have those losses, but in aggregate, in total, we know what probability those things occur. And so insurance companies obviously are a group of folks pooling their money together to insure one another. And for those that do have the unfortunate of having a plumbing leak, their claim will be paid. When it comes to catastrophic perils, it's a little bit different. So when they do happen, they don't happen that often, but when they do happen, they can have quite severe consequences. So rather than an inconvenience or an irritation or certainly disruption in your life, these are things that take months, if not years, to recover from and can have a devastating financial consequence to those that suffer these types of losses. So a little bit about USAA. We were founded in San Antonio, Texas, where I'm located, in 1922 by a group of 25 Army officers that weren't able to get insurance from the private marketplace, which may be a topic that's familiar to many of you on this webinar. And so they decided to start their own company. And that ethos really still pervades at USAA, even though this month we will be 95 years old and serve over 12 million members. The principles really are the same. It's military members and their families pulling their resources together to insure one another. And so we are very much focused on serving our membership. We are a for-profit company, but we are member-owned, and so we're not traded on the New York Stock Exchange or NASDAQ, anything like that. Don't have accountability to shareholders. Our accountability is to our members. We insure about 320,000 homes in California as a primary or secondary home. We also insure just over 200,000 renters in the state of California and about 60,000 rental properties of folks that are landlords that are renting their property. So overall, it's over 600,000 properties between homeowners, rental properties, and renters coverage in the state of California. We're a fairly major player in the state. So my story really begins in San Diego. San Diego is in many ways a key area for USAA in particular for a few reasons. Number one, there's a large concentration of active duty and former military members that live in San Diego. It's also a very attractive folks for military members to retire to spend out the rest of their career and their lives in San Diego. It also happens, as no doubt everyone on this webinar is aware, to be highly prone to wildfires. And the value of homes throughout California, but particularly in San Diego, Southern California, uh, are very high. So the property values are high in that if you had a fire and it burned a home down, it would cost quite a bit of money to replace that home. So this article came out a week ago from the San Diego County News, and I thought it was a very timely reminder that even though the great news has been that California is now out of drought, or the majority of states out of drought for the first time in 5 or 6 years, with all the snowfall that we've seen up north, a lot of the rains, and San Diego has gotten an unusual amount of rain over this past winter. Wildfire is still an ever-present threat. So there was a recent fire. It was not a major event, but it was known as the Gate Fire, and county officials were taking that opportunity to remind homeowners that wildfire is still a threat, and it's still their responsibility to properly maintain their home, their vegetation, keep that defensible space. And I wanted to read, there's a video that I'm not going to show because I know sometimes on webinars it can be very challenging to stream video to each one of you. We kind of experience it in different ways. But in the video, and it's one of the links that I think Stacy has for you, I encourage you to click on it when you have time. For the first 20 seconds of the video that accompanied this piece, you have a county commissioner that's talking about the impressive response capability that San Diego County has and can bring to bear in the event of a wildfire. The next 40 seconds of the video, quite interestingly, are from Tony Meacham, who's a unit chief from San Diego County Fire, CAL FIRE San Diego. And his part of the video is a little bit different. His emphasis is a message to homeowners. And I'm going to quote him here. He says, "I cannot emphasize the importance of people maintaining at least 100 feet of defensible space around their structure. We have over 40,000 structures that are in high-risk wildland areas in San Diego County alone. On any given day, all 40,000 homes are threatened. On any given fire, when our first firefighters arrive, there can be dozens of homes threatened, and they have to make very critical and time-sensitive decisions on where to deploy our resources. And I will tell you that if you do not do the clearance around your home, I want to send a very clear message. I do not care to risk the lives of my firefighters to save your home if you have not done your part to give our folks a fighting chance." And I found that very striking simply because while we often do focus on the response capabilities, and certainly throughout California, there are tremendous response capabilities that are available at any given time for any given event. At the end of the day, the image that homeowners often have is that when there is a fire threatening their home, there will be an engine parked in their driveway protecting their home. And we know that that is not reality. There's way more homes that are threatened or possibly threatened in any given event than we've got response resources to protect. Again, San Diego is an area of high concentration of USAA military members and families. It's also the site of some of the largest wildfire losses that USAA has suffered over the years. Certainly the Cedar Fire in 2003 was a major event. This was followed relatively soon thereafter in 2007 by the Witch Fire. And it was after those two events that I think USA really started thinking about this problem in a slightly different way. Prior to that, we did have some underwriting guidelines surrounding wildfire, but they were fairly rudimentary. After those events were much bigger than we had anticipated we'd ever experienced in the past, more on the order of a hurricane type of event rather than wildfires that we had previously experienced. The Oakland Hills fire certainly was a very large fire historically, still the #1 in the state of California, but I think we thought that more as a one-off type of event or a very unusual type of event. Having those the Cedar Fire followed by the Witch Fire in a relatively short amount of time along with fires like the Old Fire and more recently the Valley Fire, the Butte Fire, kind of realized that the landscape is changing throughout California and the losses are getting greater and greater. So as an insurance company, we need to respond by understanding the risk much better than we did at that time in 2007. It was also about that same time that many new tools and technologies came available to us as an insurance company, particularly geographic information systems or GIS systems, things like Google Earth, satellite imagery, that give us a whole new perception of the risk than we had previously had heretofore. And it was seeing the size of some of the losses, followed by the availability of technology that in 2008, 2009 led us to have a fundamental reevaluation of the risk in California. And based on that analysis, we sent inspectors out to look at homes and to photograph homes and perform an on-the-ground assessment of properties. And what we found in many cases were properties that did not have not only 100 feet of defensible space, didn't have any defensible space at all, had overhanging branches, pine needles on wind-shake roofs, things that were really not a question of if it would burn, it was a question of, when it would burn, when would that fire event occur in that particular area that would lead to that structure ignition. We consulted with experts. We've learned a lot through the work of Jack Cohen, Pat Derlin, Steve Porrells, many other folks about what lights a home on fire, what causes home ignitions, and what can protect a home or certainly reduce the threat of home ignition over time. So we also had that science in our back pocket as we were evaluating these risks. And as we took a look at some of these more extreme risks that were did not have adequate mitigation, that were in exceedingly high risk areas, we did what many insurance companies do and chose to non-renew some of the highest risk properties. Unlike life insurance underwriting is different than property and casualty in that life insurance, you get one shot at offering that policy. And once you've offered the policy, then you need to retain that policy for 10, 20, 30 years, or possibly even the life of the individual. So the underwriting tends to be fairly invasive. You are going to take a blood test. You're going to look at family medical history. You are going to do all that you can as an underwriter to fully appreciate that risk up front before you extend the offer of the policy and price the policy. In property and casualty, their policies are annual policies. They renew annually. And oftentimes that happens fairly automatically. You receive a new policy packet in the mail. Your premium often goes up or down. But for most folks, it's something that happens seamless behind the scenes year after year. Other than the change in premium, for most folks, they really don't notice that they're on a new policy period. But that is the time that insurance companies have the opportunity to decide whether they want to extend that policy, that coverage for another year or not. And so at that time, for some of the high risk policies, we decided that we were not going to extend coverage to the homeowners that were the most at risk because we felt that the risk was much greater than the premium that we were collecting on those properties. I mentioned before that USAA is a member-owned company, and so we have an amazing membership that we're very proud to serve. They have amazing loyalty to us as well, and they are our best advocates. When we do something that breaks the trust with those members, unlike perhaps some other carriers or other companies in general, they don't necessarily leave with hurt feelings, maybe a diminished view of our brand, but they move on. They call us. They let us know. They write letters. They write letters to the CEO, and many of them know the CEO and president personally because of the military connections and the bond that our military members have. So many other insurance carriers, you don't necessarily have those personal relationships. Customers don't know other customers. But certainly at USAA, because we serve the broader military community, there is a sense of community, a sense of family. that we think is somewhat unique to us and to our brand. And so from the members' point of view, they didn't see the risk the same way that we did at USAA. They saw that we had insured their property for 10, 20, 30, sometimes even 40 years. They saw that they had never had a loss from wildfire. They saw that we were suddenly, after having a commitment over many, many years, breaking that commitment to them. And so there was a fundamental difference in the view from an insurance underwriting standpoint versus a member and a member service and member commitment and trust standpoint. So even though we had briefed our underwriting plans and programs all the way up to our president and our CEO at the time, after the negative feedback started coming in from our members, we decided to take a tactical pause. Based on that feedback, we listened to our members and we started asking ourselves, is there a better way to do this? Is there something that we could do differently that would help to mitigate the risk and the exposure to USAA and to the rest of the membership while still serving those members that live in the highest risk areas? So that led us to talk with, again, experts like Pat Derland and Stowe Creek Fire, led us to our friends at the National Fire Protection Association to learn about programs like Firewise that work with homeowners and encourage mitigation as a community. We learned about the importance of not just each individual member of a community in the WUI mitigating, but the power that it has when their neighbor on either side of them mitigates, and when they mitigate their common areas in the community, and when they band together, and when they do so over many years to fundamentally change the landscape, change the risk, reduce it so that while the risk of wildfire and structural loss is not completely eliminated, it is certainly reduced to a standpoint that makes it much more comfortable to insure that risk. So we started taking really two different approaches, and I would call it more of the life underwriting type of approach. At new business, we looked at several different factors, some of which you see on the slide here: slope, aspect, the vegetation, population density, the characteristics of the home, knowing that the home itself can be a source of ignition. And so understanding the details of that particular structure, and then the whole idea of the home ignition zone, that the first 5 feet from the structure out to 5 feet is the most important to make a zone around that part that is resistant to any sort of ignition. Then looking at the 5 to 30, and finally the 30 to 100 feet space. Fire protection class is a variable that many insurance carriers have used for many years, and that's to try to capture the response component. So nobody actively puts out the hurricane, nobody actively puts out the tornado, but we do actively work to suppress wildfire activity. And so it's a component that certainly we want to look at response capabilities while not wholly relying on it, and understanding that the vast majority of fires are managed from a response standpoint, but that there's a small percentage that do become overwhelming mega fires that lead to the vast majority of structural losses, and really lead to some of those devastating fires, particularly that we saw last year in Fort McMurray, Alberta, and Gatlinburg, Tennessee. And so it's really through those events that we sort of realize this isn't just a California problem or a West problem. This is a problem that exists countrywide in the United States, certainly in Canada and elsewhere. And so it's kind of fundamentally causes us to rethink this risk in general in terms of what size events could happen, where they could happen, the time of year they could happen, and the implications really for us as a country from a policy perspective. So taking all the factors that we look at into consideration at new business, those are factors that go into our decision to offer insurance or not. And from an existing business standpoint, we wanted to not break that commitment to our members that we had previously made to them. But we also didn't want to leave the risk the same. We didn't want it to go unmitigated. And so we partnered with NFPA to roll out in 2014 a discount for communities, for homes that were in a Firewise community. It was the first of its kind. It's now been expanded to 7 states. And in California, we have by peril pricing. So there's different premiums charged for different perils, and it adds up to the total premium amount that you pay every year for your homeowner's bill. The Firewise discount in California is 50% off of the wildfire premium. So the premium that you pay for the coverage in case of a wildfire, you get half off if you live in a recognized Firewise community. It's worked tremendously for us. We've gotten a lot of great feedback, a lot of great response from members, agencies, just folks in general that have been engaged working on this problem for many years. And we see that it does spur action among our members. The discount is administered very cleanly. You don't have to call us. You don't have to send us any paperwork, any proof. You don't have to take a picture of your Firewise signs. We get maps of communities from NFPA, who works with the state forestry and other liaisons to understand what are the boundaries of that Firewise community. And then NFPA sends the maps to us at USAA. And after every policy renewal, we can map through a GIS system exactly where that structure is located. And if it's located within the boundaries of the Firewise community, the discount is automatically applied. And each year that that community remains recognized as Firewise, the discount will also be applied. So it works very well administratively, and it's a great incentive for homeowners to either begin that path when local agencies and nonprofits are talking to them about Firewise, talking to them about their risk and encouraging them to become Firewise. Oftentimes they get a question, does my insurance company give a discount for this? And for them to say, well, at least one company does, USAA, in the states where we offer it, makes a huge difference. Pure is also a company in California that also offers a Firewise discount, as I understand it. And we would love to see more carriers follow in our footsteps. We'd love to see it if agencies in the future could go to communities and say, here's a list of 5 or 10 insurance carriers that also offer the Firewise discount. Because if somebody, a homeowner with a different carrier mitigates their property in part because that carrier is offering a discount and they're next door to a USAA member, well, that protects our member. And vice versa. When our member mitigates his or her property, well, that's mitigating that customer of the other company next to them as well. So again, that focus being on the community mitigation and really trying to change the landscape over the course of time. So in addition to the Firewise discount, which was a great way to handle the existing home stock and educating members on their risk and incentivizing them to take proactive steps to mitigate their risk, we really have engaged in an education effort that takes many different forms. We've got a lot of great information on our website. We will send brochures to folks. We'll staff local Firewise or wildfire preparedness days, different events. We have gone to communities at the request of local fire departments that maybe there's a particular community that they would really like to see become Firewise, and they're encountering a little bit of resistance or some skepticism, or just having us there in the room to echo their message and reinforce the value of taking these proactive steps and becoming Firewise, and that mention that there is a financial incentive if they live in one of the states where we offer the discount, is a great 1-2 punch. And we've seen firsthand that it can have an impact in terms of getting a community from maybe being on the fence to being firmly committed to that path of taking steps to proactively own their risk, manage their risk, and stick with the program over the course of time. We also, in the areas that we've got office locations, have had volunteers go out on certain projects. If they're creating fuel breaks, it may be, again, knocking on doors, giving batteries to folks to replace in their smoke detectors. We've done all sorts of different things that local agencies have requested volunteers for. It's a great way to be out in the community, to be seen, to interact, to build relationships with state and local agencies. And that physical presence means a great deal to kind of see us out in the community. It also gives us firsthand a better appreciation of the risks. I think one of the key parts of underwriting this risk is understanding that there's a lot of complexity that goes into why a structure burns. You simply can't look at a map or a satellite image and really understand truly what that wildfire risk is. You can't see from a satellite image what the understory looks like. You can't really see what plants are native, not native, which are fire resistant, which aren't. It's very difficult. So you feel like you have an appreciation for the risk, but until you really walk on the ground, uh, and talk with the agencies that are the local experts, you really don't have a full appreciation for the risk. Um, so we know that wildfire hazards are kind of an inspectable risks, and that there's a lot of variables that go into why a home would burn. I think there's a general sense, and we see it in the media and others, that one home burned, one home didn't, that there's a sense of randomness to it, or a sense of wildfire is an act of God, and there's only so much that you can do to protect your home, and that's really not a proper expectation that is set for homeowners. Homeowners need to understand that there's a lot of science and research that has gone behind understanding why homes burn, why a certain home will ignite, why it won't ignite. Yes, of course, there's some variability there, there's some factors, there's different odds, but over time, really, there's a lot of principles, sound principles that have been developed over the years that if homeowners follow, they can greatly reduce the chance that their home will be lost in a wildfire. Um, some of the most recent research that we've learned that indicates areas for inspection and really focus from homeowners, certainly that non-combustible zone of 0 to 5 feet for not just the primary structure, but also any surrounding structure. We know in many cases folks have some acreage, may have some significant out structures, and so you'd want to focus on them as well because they certainly could have an economic loss. And then seams and junctures that are kind of where different structure materials or attachments meet, provide crevices, gaps, catch basins, et cetera, for embers. So we certainly know about the power of embers, and those are areas, again, that we encourage homeowners to focus on. So I've talked a little bit about the collaboration with NFPA, but there's many different organizations. I couldn't put them all on the list here that we partner with and are looking to partner with in the future, again, to help our education message resonate with homeowners. We think there's a lot of power in giving the same message to homeowners rather than two slightly different messages. And again, to understand the local landscape. And I would call our strategy echo and amplify. So we want to echo what the local folks that are there all day, every day, working at this space are saying to their citizens, to their residents. We don't want to conflict. So if they're using the term home ignition zone, if we were to come and say defensible space, that may be confusing to the homeowner, even though they're essentially the same idea, a small difference, right? There's certainly a nuance there, but to a homeowner, hearing those two totally different terms often results in confusion, and that confusion results in inaction, right? I don't really know what I'm being asked to do here, so I'm not going to do anything at all. So echoing the message that's already being delivered by the local experts, and then what I would call amplify. So to the extent that of the over 300,000 homeowners that we're insuring, we can reach folks that perhaps you as a local or state agency can't reach. but sharing the message that you want them to hear is certainly an area that we think we can help in terms of creating a collaboration. I also work with many different local nonprofits that are really focused on this space as well. And so again, those local nonprofits do tremendous work in their communities. They're very knowledgeable and they're a great resource where they exist. And so we try to find ways to partner with them, and that may look and feel different for each community. And then the last thing that I'll mention is we have a wildfire response program. So this is a private fire response program with our partners at Wildfire Defense Systems. They're located in Bozeman, Montana. And we have this in several western states where folks originally they had to proactively opt into the program, but increasingly in different states we're changing it to an opt out, because oftentimes we were finding when there was an active fire threatening a property and wildfire defense would deploy out to that property, they might be able to see it from the street, but they didn't have the homeowner's permission to go on the property. And so we're trying to contact our member and let them know that a private fire response resource is basically in their neighborhood, and we're looking for their permission to enter their property and take what we call non-destructive mitigation steps. So they're certainly not going to cut down any vegetation at that time, but they would move a wood pile, maybe clear gutters, set up sprinklers around the home, things that they could do ahead of the fire line passing through, and then after the fire line passing through, certainly going back and looking to put out any spot fires that may have occurred, put out any embers that may be there, check on the condition of home, and report back in terms of whether there's any losses. Wildfire Defense always checks in with Incident Command. Sometimes they're allowed access to the property, other times for safety reasons they're not, and they need to hold back. And so we certainly always respect the incident management team and the structure and look to build a relationship with those. I think attitudes as I talk to folks at fire agencies are really changing over time to private fire response that are funded by insurance carriers. I think in the past, insurance carriers did not do a great job of engaging agencies, educating them about why they were doing this, didn't work with the private fire response to be aware of the incident command structure and team, and so they were kind of considered cowboys that were out there. But over time, I think the two communities have worked very well together, are understanding each other better and better. And most agency folks that I talked to today understand that it is an additional resource that is at their disposal that can assist them. And if they're going to check on the condition of certain properties or prep those properties, then those are properties that they don't necessarily have to worry about and can focus on other things. So more and more, as I talk to agency partners, I'm realizing that there seems to be a place for a private fire response that's funded by insurance carriers. USAA is a little bit different than many other carriers. Many other carriers deploy a private fire response on their high value homes. It might be $1 million or more. Each carrier's got different restrictions, but typically that's the profile of the home. For USAA, there's no value restriction. So for members that have this as an endorsement on their policy, trailers to mansions is the way one Wildfire Defense Systems employee put it to me, and I really like that kind of visual. So we will do our best. Certainly, can't always get to every home, and so there's always an understanding with our members and language in the policy that makes that clear. Wildfire Defense makes the operational decisions in terms of what homes to go to and what homes, what tactics to take. I don't manage that at all from a USAA standpoint. And so we've gotten a lot of great feedback from our members and from partner agencies on that program. We also have a very innovative program with Wildfire Defense. They have an app that we've co-developed with them that is called WDS Pro that members can download and take photos of their property and send them in to get a wildfire risk assessment of their home and help guide them in terms of some of the opportunities that they have for mitigation. So we're very proud of that as well. Certainly, part of our education messages for homeowners is about preparing the physical surroundings of the home. Again, very similar to what local agencies are trying to talk to their residents about. So nothing really earth-shattering here, but just wanted to give everybody line of sight that this is a part of our education effort, and we do talk to our members about their opportunities in the home ignition zone. Something that we do, again, beyond just the physical surroundings is their financial preparedness as well. So we want to educate them on their deductibles. How much money would they have to come up with if they were to suffer a loss from wildfire, really, any other peril? We often find that members, when they originally call, they'll select a certain deductible, and then over time, as that policy renews and as they haven't had a claim, they forget what their deductible is. And we know that many of our members don't have a large emergency fund set aside to cover 3 to 6 months of expenses, which is what we typically recommend. And so certainly part of those expenses that you would want to set aside would be money to cover your deductible. So educating members, making them aware of the deductible and helping them select the best option for them is certainly something we talk about. We also talk about coverage limits. So the idea of typically we think of a coverage limit as what we call coverage A, or the replacement cost of the value of your home. So if your home is insured for $300,000, the idea is that is the minimum amount that is estimated to rebuild your home from the ground up if it were to be lost in a wildfire. That's going to include things like debris removal, right? Cleaning the site, all that debris, as many of you have seen firsthand. Somebody's got to clear that off the property before you can start the rebuild process. So that's not something that's typically considered in the market value of a home or what you would sell it in a real estate transaction, but it's certainly part of the rebuild cost. Other things that factor into rebuild cost, certainly if you lived in a subdivision, there may have been economies of scale for that builder when they're building many homes at once, but if we're just building your home as an individual home, you're going to not get that. So the price of some of the materials are going to be higher than perhaps when the builder first built your community. There could be demand surge. If many homes in the community have been lost, everyone's trying to get lumber and shingles and roofers at the same time to rebuild. So there's a lot of different factors that go into establishing that rebuild cost. Ultimately, it is the member or the policyholder's decision as to what threshold they want to set. But insurance companies have tools that help members or customers set that replacement cost. And so we always encourage folks to talk to their local agent or their insurance company to work through what that estimate would be and to understand the ramifications if they deviate off of what the insurance company comes up with as an estimate for the replacement cost. We also talk folks about the coverage limits of out structures. So anything that's not attached to your home is considered an other structure or an out structure. And oftentimes those are covered at a lower limit. And so for many folks, that may not be a big deal at all. If you've got an attached garage and really your out structure is just a fence or just a small shed, tool shed, things like that, that may not be a big deal. But if you've got, again, a ranch or some acreage or some space, you may have significant value in your out structures that may not be covered entirely by what your policy limits is, and you would want to adjust that upward. So we want folks to be aware that those out structures are not covered by the same limit as the main structure. And then certainly we talk about the contents, the things inside the home. Those are also covered by a different limit, and so you'd want to make sure that you have the proper coverage for those items as well. And exclusions that your policy covers. So flood is probably the big one. That standard homeowner policy does not cover flood insurance. That needs to be purchased through the National Flood Insurance Program that's offered by the federal government, FEMA. So making folks aware of that, and then any other exclusions that might apply. Talked about emergency fund before, but particularly, once you evacuate, if you have to, having that ready access to cash, power may be down, you may not have the opportunity to use the ATM, or you may have to pay, out of pocket for a few days or have that. So having access to the emergency fund. Secure storage of records, a little bit easier now in 2017. Usually we always talked about a fire safe box, and certainly those are things that you'd still want to do for maybe some old family photos, things like that. But insurance companies now, we've got your policy electronically, we can access it, you can store things on the cloud, so a little bit easier than maybe it is in the past. And certainly doing a home inventory will help the claim settlement process tremendously. There's a lot of great tools and checklists, things that folks can get out there. I always encourage members at a minimum to, for each room in their house to stand in the middle of the room and to get a video camera and to videotape, just kind of do a 360 and videotape what's in that room. And so that can be very quick way to say, okay, was that a 42-inch TV or 54? Was that an LG or was that a Samsung or how much? So establishing the value of some of these items and remembering what you had, it's so easy after a wildfire to really forget all the things that we typically have. The other part, of course, is keeping any receipts for any major purchases that you have, because you'd want to make sure that you properly establish the value of those big ticket items. So we've talked a lot about preparedness. The ready part of Ready, Set, Go, if you want to think about it in those terms, and that's a great program that iChiefs offers. So we also talk to our members about the set and the go part, and we talk about the importance of having a go bag, being prepared, evacuating if you are asked to evacuate. We encourage folks always to evacuate, even in voluntary evacuations, and certainly, obviously, if there's a mandatory evacuation. So we want to get those messages out to our members just the same way that many agencies and local fire departments do as well, in terms of being prepared and being ready when a wildfire hits to be ready to go and not try to scramble. We see some interesting decision making of items that people grab if they're not prepared. And so we want to work with our members so that they are fully prepared, not just to prepare their house, but to be prepared to evacuate as well in a worst case situation. And so that's really it in terms of prepared remarks. Again, we've had an evolution on wildfire over the past 10 years. And certainly there's a lot more to learn. It's a challenging peril to underwrite and to understand. We're always learning more about this risk. And so it's certainly a challenge for a lot of us. The other thing I'll mention is certainly from an insurance carrier, it's also, we know that the most important component of whether a home burns or not, whether it ignites or not, is the home itself and the vicinity immediately surrounding the home. From an insurance carrier standpoint, sometimes that's the hardest information to get. When we ask members information about their home so that we can help get them a quote, oftentimes they don't even know the square footage of their home, much less if their eaves are covered in quarter-inch mesh or eighth-inch mesh, et cetera. So certainly educating homeowners on the importance of some of these, again, small details, and having them appreciate those features of their home. And looking to upgrade if need be, if there's an opportunity there, is something that we are always striving to do. So with that, I'll turn it back over to Stacy and see what questions we've got from the audience.
All right, excellent. Do you also consider elevation in your assessment of risk?
Yes, we do.
Okay, easy. The next one, and did you want to mention anything about the Big Bear Lake?
Yeah,
so I covered it all
quick.
right.
So this is an event that USAA has sponsored for the past 5 or 6 years. We're one of several sponsors. Actually, the Sierra Club is the big, the title sponsor, the main sponsor for the event. But it's a Xeriscape tour, and what we love about it is that it really showcases to homeowners what Firewise, I guess for lack of a better term, what Firewise landscaping can look like. It is not clear cutting. It is not just cutting down everything. It's really taking steps certainly to protect your home, but you do have vegetation in those zones that we talked about in your 5 to 30, and if you're 30 to 100, it's really just about clearing the understory, the underbrush. There's ladder fuels. And the before and afters are always amazing, and homeowners that have gone through it and they're selected to be kind of showcased homes on this tour are always talking about the improved sight lines that they have. They're able to see more wildlife, see more trees. They didn't realize how much some of that understory was really blocking their view before. So in addition to making their home a little bit more hardened against the threat of wildfire, they're actually improving the landscape and the views and the accessibility to nature and to wildlife. And so it's kind of a win-win. And so what we love about that tour is just that it really kind of helps other folks really get an idea of what we're talking about when we're talking about some of these home ignition zones and techniques that you need to do to reduce your wildfire risk. It's not clear cutting. It's not, people think of a strip mine, I think, kind of flat, and that's not it at all. And so it really gives them a good visual of what we're talking about and inspires them to take action in their own home. So we'll be out there July 15th. We'll have some, one or more representatives out there that would be happy to visit and talk with you. So if you're in the area at all, take a drive up in the mountains in Big Bear, and we'd love to see you.
Excellent. Yeah, now I'm interested in going. My July is fairly open, so sounds great. The next question is, what other companies offer a Firewise discount? And also for the discount in California with USAA, can you explain that a bit more? So what does the 50% off fire risk in the policy actually mean?
Yeah, so don't quote me on this because I don't want to speak to what other carriers are doing, but my understanding is that there is a company that in California called Pure Insurance that also offers a Firewise discount. So, but something you may want to Google or to look them up and to ask them those questions. I'm not aware of anybody else that's offering a Firewise discount, but again, we have not put any intellectual property around it. We haven't tried to patent it and make it our own because we would like to ensure or to encourage our competitors to follow in our footsteps because we think it benefits USAA members by having their customers receive some type of discount and encourage them to take steps to mitigate their property as well. In terms of how it applies, so on your bill, your statement, you're going to get a charge for certain perils that are kind of listed out. And so one of those charges is for wildfire that kind of says this is the cost of your premium to insure you against the wildfire risk. And that might be $100 or $200, and then it's half of that. So if it's $100, you'd save $50, or if it's $200, you'd save $100. So it's just 50% off of that. It's going to vary by community. My understanding is that on average, the wildfire premium is about 10% of your overall homeowner's premium. So in many other states, we actually have simplified it and we just make it 5% of the a 5% discount on the perils that impact the structure. But in California, it's half of the wildfire component, and that may vary based on where you live.
Okay, so I'm combining a little bit of questions here. So if you sent me a question with multiple points, I'm just kind of mixing them together so that we can be a little more effective. So this is about defining a community for the purposes of Firewise. I guess, how do you do that? And then just to clarify, if a home is in a Firewise community, they still get the discount whether or not they met that defensible space requirement. Is that correct?
Yeah, so great question. So first of all, the great news about USA is we don't have to define the Firewise community. We leave that up to NFPA, to the California Fire Safe Council, and local fire departments to help with that. So they work together to define the community. NFPA out of their Denver office creates the maps today. I think there's some thought that maybe they would hand that over to state agencies or local agencies that have a little bit better line of sight to it in the future, and then they pass us the maps. And so sometimes what happens is we will get a call from a member that says, hey, I'm not getting the discount, but I live in that community. And we'll go back to NFPA, and they usually go back to the state agency, in this case, the California Fire Safe Council, and we'll say, okay, Joe lives at 123 Main Street. He says he's part of this Firewise community. Is he or is he not? And so sometimes the maps will be amended if we didn't get it quite right. But again, we don't decide where those boundaries are. We defer to NFPA and state and local agencies to define that. The second part, remind me of the second part of the question, Stacey. I'm sorry.
So if I think you covered it. So that's how you define the communities. And then if a home is right next to another home and one is not actually meeting the requirements, but it's still in the Firewise community, it would still get the discount?
Yeah, so great question. And this is an important point I want to clarify. So Firewise communities are interesting because not everybody participates. Just because you live in a Firewise community does not mean that everybody in that community has mitigated. In fact, in talking with NFPA, I would say, usually between 20 and 30% on average, some a little bit less, some more. But let's just say, about a quarter to a third of the folks are actually mitigating. Well, that means that 2/3 of the folks are not mitigating. And so that's a problem. So when the third of the folks that are mitigating, they are reducing the risk for that entire community. They are changing the landscape. And so our data shows that a discount is justified for those folks because there is a reduction in the chance of losses from a wildfire. What we do not do is automatically grant or kind of bypass our wildfire underwriting restrictions just because you live in a Firewise community. So sometimes that confusing people because they say, well, why are you offering a discount, but yet you're saying, you're unable to offer me a policy. And the way that works is because not everybody participates, they're not automatically meeting our underwriting guidelines for a wildfire. There are programs such as Wildfire Partners in Boulder, Colorado, which is a wonderful program that works with homeowners at the parcel level. And if they go through the program and complete all the steps of the program, which is very rigorous, but it also gives them access to resources to help get the work done, and they get a certificate from Wildfire Partners, we know that homeowner at that parcel has done the mitigation. And so we honor that certificate if they would otherwise be restricted from wildfire restrictions. If they're a Wildfire Partners certificate recipient, they've gone through that program, that is their key to acceptability. We'll say we won't look at our wildfire guidelines because you've done this program. And I know Jim Webster, who works for Boulder County, has spoken in California and elsewhere about this program. And so we highly encourage communities to network with Jim and to understand it, because that is a great program for individual homeowners to follow and to meet acceptability guidelines. And many insurance carriers in Boulder accept that certificate, not just USAA. So it's been a program that I know many insurance companies have pointed to as a model program that we'd love to see expanded to parts in California.
Okay, great. This should probably be a very simple one. Is there a surcharge for being a designated wildfire?
So there's not a surcharge per se. The rates vary based on, so if you live in a high-risk area, you're going to pay a higher premium. If you live in a lower-risk area, you're going to pay a lower premium. So there's not like an extra surcharge, I guess, for that. But clearly the premium is going to vary with the propensity of loss. And if you live in a higher risk area and you're more likely to have a wildfire loss, you're going to pay a higher premium.
Okay, so this is another one of those I kind of lumped it together. People want to know a few more specifics about the difference between an actual Firewise community if there's other exceptions. So do they actually have to be Firewise recognized, or is it as long as they're implementing activities? What about cities that have their own inspection process? So for example, someone mentioned in Oakland, you get a pass-fail. Would that count?
Great question. So this has been a challenge for us. One of the reasons that we partner with NFPA in the Firewise program is because it scales. It's national in scope. There's over 1,400 Firewise communities in over 40 states. And so we understand that each Firewise community is a little bit different. It's not a one-size-fits-all set of criteria. Not every Firewise community has done the exact same steps or is at the same level of risk. But having said that, we've seen the results in terms of data and modeling and trying to understand, is this program an effective program? And it is, and it scales nationally. There are, a wonderful program is Living with Fire, which is in the Reno Tahoe area in Nevada. And so they do a lot of great things with their communities. In fact, many of them would meet the same requirements if they were to apply to become Firewise. They probably would easily meet the criteria because they've done a lot of great work. The challenge for us is that and I was out there earlier this year talking with their folks and learning more about the program. I would have to have a similar process that I have with NFPA. We'd have to get the information, the map somehow. I would have to file that discount with the state of Nevada. I'd have to do a lot of other administrative things, integrate it with our IT systems, things like that end up being very challenging if we're trying to do each of them as a one-off. Our rates have to be filed with the California Department of Insurance, and in order to justify a discount, you need enough policies to show that there's a performance difference between people that participate in that program and other programs. So logistically, it just becomes really too challenging. We're always happy to have those conversations with folks and to learn about programs. So I don't want to have a blanket statement say we will never consider it, but there are a lot of hurdles that come with that. And so what we been generally doing with folks, and again, we'll have individual conversations to understand their program, but in most cases, those activities are going to be sufficient to qualify for Firewise if they fill out the paperwork and send it in. So it's unfortunately an extra administrative stuff that community would have to take, but that's probably the easiest way to get them a discount rather than to try to establish a separate discount for each local program that's out there.
And I'll just add my own too. So someone was mentioning that, in California we have a Cal Fire code that's kind of a yes or no, but the benefit of having an actual Firewise community is then rather than one home that's super well defensible, it's kind of a community effort. It's kind of a grassroots effort. And so it does a little bit more in my mind than just, one person who's doing great and another person and everybody else around them is very undefensible, because the firefighter might still not want to go in there if only 1 out of 10 is following those principles. So the community aspect is really important, which is probably why you guys started with Firewise, and then you might want to expand out to other opportunities. Okay, moving on to our next question here. Do you still do wildfire inspections or re-inspections? And is it just USAA reps, or do you use outside inspectors like retired firefighters?
It's a great question. So we did that for many years. We've paused that program in California, and one of our challenges is simply logistics. So we don't have local agents. That's kind of the unique thing about USAA. So we don't have local agents that live in that community, that are in that part of that neighborhood, as many of our competitors are, that really understand the landscape. We have our major operation here in San Antonio, Texas, where I am. We've got several large regional offices throughout the country, but our members do business with us through our 800 number, through our website, and increasingly through our mobile app. And that works really well for our military community that we're here to serve, because they're very transient and they move around. And so they don't, if they're moving every 2 to 3 years, if they're active duty, right, establishing an agent relationship over time can kind of get tiresome, where if they're always dealing with USA no matter where they live, right, that's very easy for our members to deal with. So that direct rider model has really worked well for us and for the military community that we serve. So the challenge is then when we go out and we do an inspection, oftentimes we would have an inspector that may or may not have gotten some type of training, right? But they're taking photos, and those photos, unfortunately, with our technology today, that they're two-dimensional. Maybe in the future we'll have three-dimensional photos and I'll really understand the vegetation and whatnot. And then they're going to an underwriter that may be sitting here in San Antonio or in one of our regional offices that, again, doesn't know the landscape, doesn't know the difference in the plants. It's really hard to tell, like, well, how close is that to the home or not to the home? And so it was just very challenging for us to underwrite those. So that's where we're trying to leverage that technology in the WES Pro app that I mentioned. Not to say that I would rule it out in the future, but it just is a kind of a unique hurdle that I think we face. I know that there's also some talk in the industry about having a group of folks that are more certified or recognized as wildfire inspectors, right, rather than just general home inspectors. And so that'll be interesting to see if there's a certification program, training, et cetera, that happens in the industry. So something that we may take a look at in the future, but today we do not have any wildfire inspections, either from USAA or from a third party.
Okay, great. So we're going to do, I know we're a little bit past the hour here, but Rob has kindly agreed to stay on and finish out these questions for us, so we'll keep going. The next one is, what policy changes do you see as most important for making our communities better adapted to living with wildfire?
I think from my perspective, and this is Rob Galbraith talking, not necessarily a USA perspective, but sometimes I know it's very frustrating for agencies and other folks to work with homeowners and to measure outcomes, right? So there's been a lot of education that's occurred in the past, lots of wildfire expos and Firewise days and tables set at and brochures handed out and assessments done. And at the end of the day, it's really hard to measure, well, what was the positive outcome out of that? What did I get for that money and that time and effort spent? And if you think about comparing that with fuels mitigation projects and other stuff where I've got, trees on the ground, and I've got biomass, and I've got some metrics that I can show, and I can say, there's a shaded fuel break here, or that wasn't there before, and I can, quantify better some of those types of projects than the homeowner education and engagement. I feel that we're kind of moving towards the agencies are moving maybe away from working with homeowners directly and more trying to do what's in their span of control or what's in their power. And I think, while I certainly understand that and I understand some of the challenges, I think it's a mistake to leave the homeowners out of it. I think, as we talked about at the very beginning, at the end of the day, our fire response capabilities are not such and will never be such that we can put an engine at everybody's driveway in a wildfire. So the homeowner is a critical part in this of finding a space for response that's safe for our firefighters to defend the fire. Our homeowners need to understand the risk. They need to appreciate the risk. They need to understand when the fire department will deploy or won't deploy, where are safe areas, where are not, what are defensible areas not, and then what steps they can take. And so certainly that's been our focus at USAA, is educating our members, trying to offer incentives to the Firewise discount and other things to get them to mitigate, whether they mitigate because they are getting a discount or they're mitigating because they may lose their insurance, or whether they're mitigating because they have a friend that have done it or they think it's fun to get together as we care less at the end of the day, I guess, of what inspired that particular homeowner to mitigate, and more that they are mitigating and that they have done the work. And so I think sometimes we have this frustration where, well, if we just educate them on their risk, they'll take action. We know that's not sufficient, right? It's a necessary first step, but it's not sufficient. I don't know that any of us have unlocked the what it is that motivates homeowners. And there's been a lot of social science research in different communities on this. We've supported some of that and will continue to do so. But I think there's a lot of opportunities to research that further. At the end of the day, I don't think we can take the homeowner out of the equation. And so we just need to continue our efforts on both sides, really all stakeholders, and okay, what can we do together? How can we work together to engage the homeowners and have them be part of the solution?
I don't think I could have said it better myself. This is, again, Stacy talking, not my organization, but I think the more and more we move forward with fire, it has to be a collective effort. We have to all be involved. So, excellent answer. The next one we have is, do your local policy writers that do home inspections before writing the policy go through home ignition zone training so that they have the understanding of fire behavior that you seem to be speaking about today?
I'm really not qualified to comment on that because I don't want to talk about what other companies are doing, and I don't have a line of sight to that. So it's kind of interesting, just so that everyone is aware. I know some folks maybe from insurance industry on this webinar, but many are not. So as an insurance industry, we can't just call each other, right, and talk about our practices. That's considered collusion. And so it's been a little bit of a challenge to work together as an industry. We do have trade associations and other forums where we can come together as an industry. But I know we've been talking with NFPA and others have been trying to bring the industry together and try to find the right forum to work together on some of these issues. So it's something that I know we're actively supporting any efforts that are out there to bring folks together so that we can respond in a more unified way. Having said that, each of us has our own evaluation of risk, our own process for underwriting, our own risk appetites. There's so many factors that go into what motivates an insurance company to select one risk over another, to choose to offer insurance or to choose to not offer insurance or to revoke, to non-renew somebody. So I don't know about California. I know here in Texas, I've heard that we've got over 700 carriers. So usually when I talk to communities in Texas, I say, if you're having a challenge with your individual carrier, call one of the other 699. If you call some of the major writers and you're having a problem, independent agents are great because they can run quotes to many different companies at a time. They can be efficient. Obviously, there's all sorts of web tools and departments of insurance often have some information for consumers. So there's a lot of resources that are available for homeowners. And so, I think all of us as an industry, as I mentioned before, are just trying to grapple with the risk and some of the events that we've seen, like Fort McMurray and Gatlinburg, and how should we respond as industry and what works best for each of us. We certainly know that word is getting out there on the fire science aspect of it. And so we're very supportive of that and want our competitors to rely on fire science. Some of the things that we hear about, I would say, are not good fire science. We talked before about clear cutting to 100 feet. We know that is not supported by fire science. So we're not supportive of efforts like that. We would like to see folks relying on what we've learned over the years as a research in the science community and try to implement those best practices.
Yeah, and I'll second that. We have come a long way in a lot of different aspects of creating a defensible space for people that is still ecologically beneficial to species. So, I also feel free to also email me. We have a lot of research briefs and other past webinar events about that, where I can put you in touch with other resources. This is great. We're going to come full circle. So back to our very first question about elevation being included in the risk assessment. Expand a little bit on that as our last question here. So, for example, are you less strict in areas above 9,000 feet?
I don't want to comment specifically on some of the proprietary ways that we look at the information. So that is something that I mentioned some of the general variables, but specifically what we look at, I don't want to comment on that. We don't have a threshold that's hard and fast. I'll put it that way. So there's nothing special about 9,000 feet above or below. It's just one of several factors that go into our assessment of risk.
Okay, well, I also noticed there has been some great links in the chat box. So for people who are registered, in the next week, you'll be getting an email from me that includes all the links we talked about today, as well as the ones from the chat box, the video recording of this, and the PDF of the slides. So thank you so much, Rob. That was an amazing presentation, and I think a lot of people were really digging what you had to offer. So thank you so much, and thanks everyone for joining us today. Yeah, we'll call it a day.
Thank you all very much.